Good morning. It's Market Day Report. Welcome to another trading week. We've got a big week. We had a big week last week with a couple of big reports on Friday. Crop production report, World Ag Supply Demand Estimate report. Well, this week, what could be happening with our interest rates? That's queued up for this week, plus cattle on feed report on Friday. Right now, let's see what happened in the overnight session, and we'll start with corn. And speaking of corn, our next guest will tell us about, he'll tell us about a flash sale reported overnight. December, 425 and 3/4, down 4 1/4 cents, following that, surprising USDA report. Now, the bean market, half penny higher in the overnight session at 10.46 and 3/4. Wheat market overnight, let's start with Chicago. The December penny and a quarter higher, 5.24 and 3/4. Hard red, unchanged, 5.14 and 3/4. Spring wheat contracts, mixed territory, and the cotton overnight down 34 at 66.49. Brian Hoops is president, Midwest Market Solutions. All right, don't want to steal the thunder here, but export sales, let's talk that.
Yeah, good morning, Tony. Hope you had a good weekend as well as everyone else. So we finally had a flash sale of corn this morning to report. About 148,000 sold to an unknown destination. So great to see it. It's been a couple of weeks since we've seen anything related to corn as far as sales go, and we finally had one this morning. We had a big rally on Friday, mostly driven by the funds. They were buyers of about 18,000 contracts on Friday alone. And because of the technical picture of these corn and soybean markets, the funds are probably going to be better buyers than they're going to be sellers here, despite the harvest that's kind of starting up and will be ongoing throughout the month of September. As long as those technicals remain very friendly, the funds will be covering these short positions. We also had some news that came out over the weekend that China, we know, of course, they're not buying any U.S. soybeans. They still can fill their needs out of South America, so they don't need to buy anything from the United States. And whether we had a trade war or tariffs or not, they wouldn't be buying from us. They're buying from South America. That's their preferred customer. They're buying 6 contracts of soybeans out of Argentina and 4 from Brazil over the weekend, and that's for shipment into mid-November. Normally, if they are short, China buys beans from us about this time frame in September, October. Usually it's about 10 million tons, but because they had such a monster crop this year in South America, they can buy all their beans. We believe they don't need to buy from the United States. They're going to buy everything out of South America. So that's a little bit negative for the soybeans as far as longer term demand. Trade is, still kind of shifting through some of these numbers that came out on Friday. Some real bearish numbers, especially planted acreage of soybeans increasing, corn being the highest since 1936. We planted a lot of corn this year, and we're going to harvest a big crop this year, although it may be smaller than what the USDA said on Friday. I think a lot of these corn and soybean yields are going to be lowered in subsequent reports.
Yeah, good points there. Hey, Brian, hang on. We'll take a quick break, be back on the other side. We'll talk livestock. Market Day Report continues in a moment. We mentioned it earlier, cattle on feed report. The monthly cattle on feed report comes out Friday after the close. Now, before that, we have a lot of trading to do. Maybe today we'll start trading on the heels of cash cattle. First, let's go to the live cattle market. This is how we settled the session on Friday, the October, down 237 at 229.90. And December at 231.92. It was off 220. Cash in the South at 240 last week, which was a little higher, but 3 to 5 lower in the North at 238 to 240. That premium that the North has held over the South is now gone, as it looks like cash is going to trade even both in the North and South. Feeders on Friday losing 675 on the October, 345.60, and deeper losses on November, January, and March contracts. How about hogs? Lower across the board. Front month down 110 at 97.07. Brian Hoops is with Midwest Market Solutions. Brian, slaughter was higher last week as well, so it looks like things kind of favor the Packers right now.
Unfortunately, it does. They've lost a lot of their margins. They're only slightly positive right now because cutout values have dropped so much. And we expected they would start to fall as demand softens after the Labor Day holiday. They're probably going to continue to weaken here before they stabilize. But they were down almost $16 last week in the choice, and Select was down several dollars as well. And that's why the Packers have lost some of the margins. So you mentioned cash between the North and the South has finally gone to par. It was a huge premium for most of the year until this last week. We did see several dollar losses in the North, like $3 to $5 losses on a dress basis. And in the Southern Plains, $2 to $3 losses. We're probably going to see additional losses here in the next week or so until this cash market can stabilize. We're probably a little bit overvalued on the cutouts and the cash markets. I don't think we're going to fall out of bed like we did last year during this time frame. Numbers are really tight, and that's going to be highlighted by this Friday's cattle on feed report. So some of the really early estimates that we've seen are putting on feed numbers down a couple percent from a year ago, and placements could be down 10 to 11% from last year. Markings will be down as well, but the placement number, I think, is what's really going to attract trade attention. They're going to focus on that number, which should be fairly supportive for December, February futures as we go through this trading week. So we wouldn't be surprised to see some additional losses, scored early this week, anticipating the cash markets coming down. There was a lot of fear, I think, on Friday that the USDA was going to announce something in regards to the border reopening. We saw huge losses on Friday in the feeder cattle market. They didn't announce that at all. It was some aid package that was being given to ranchers and farmers that were affected by flooding and wildfires. So I think we could recover some of that, but overall it looks to be more of a softer tone this week for the live and for the feeder cattle.
Yeah, good points there. Brian Hoops, president of Midwest Market Solutions. We'll see him back on Wednesday.